The reverse mortgage becomes due when it is no longer the primary residence of the borrowers or there is a default on the loan terms. If the borrower chooses to sell a home, obviously there's no longer a primary residence, so it's due. If they were to pass away or go into an off-site assisted living, that would be another example. Temporary absences are fine, and even that 4-month vacation in Italy that you now can afford to do is just fine. A default provision would occur if property taxes, homeowners insurance, or something like that were not current, or if the home is not maintained to safety standards. Let's say you pass away and the home is now part of your estate. Your heirs would then have 6 months to either sell or refinance the property, with 2 possible 3-month extensions that are pretty easy to get. The home would be sold and the loan paid off, and then the remaining equity would be included in your estate to be distributed according to your wishes. Sometimes your family would like to retain the home. They would have to refinance the mortgage and then could move in or rent the property. In the event the loan balance is higher than the value of the future value of the home, there are special provisions to allow your heirs to purchase the home at 95% of that current value. And the FHA mortgage insurance would make up the difference to the investor and get it fully paid off.